I don't know why I did that, but today's video is about the stock market. Should you try to sell? Should you be buying? What the heck should you be doing right now with everything that's going on? Now, I'm gonna specifically be looking at S&P 500, which correlates with NASDAQ and the Dow Jones. Now, these are the indexes. They basically compose of different stocks, and here's the bottom line. They had a huge spike to the downside because there was some vaccine news from the Wall Street Journal. Basically what they said was, look, this vaccine is not gonna be released when we thought it would be. It's actually gonna be pushed back a bit farther. So with that in mind, that correlated with the stock market, the indexes, and they actually spiked down. Now, what does that mean for you? Well, it depends on your goals and really what you're even looking into this video for. If you're looking to specifically talk about day trading and how to go ahead and read the markets, I am going to walk you through a guide of what I believe is the most important part of trading, understanding your market structure. If your goal is to just understand and get a bit more information on the markets to maybe just continue investing long term, like you're just trying to go ahead and just cost average and you're just buying in consistently, good for you. I'm proud of you. It takes discipline to do that, and this video can still be useful because now you'll have an understanding of what structure is and maybe how you can go ahead, and if you do see some of these signs that I'm showing you on the charts here in a bit, you can go ahead and take advantage of that and keep doing what you're doing, but have a bit of information and knowledge behind when you're doing it. Okay, I hope that makes sense. All right, and last but not least, if you're a person that is just watching this video because you are not involved in the markets at all, you're not investing long term, you're not in day trading, but you're like, hey, look, I want to get some information so that I'm prepared, I'm ready, so that when you do go ahead and decide to jump into the markets, you know what the heck you're looking at. Well, good. This is going to be great because I'm going to go ahead and walk you through step by step exactly what you need to pay attention to and make it as simple as possible. We will be looking at the actual charts here in a bit, but before we do that, make sure if you like this content and you get some value from it, go ahead and give me a like down below and subscribe if you want to see more content. I'm going to be posting every single week about the stock market, trading, business, entrepreneurship. Right now I just created a software company and basically I'm going to be documenting this whole process where I'm pretty sure next year, 2021, I'm going to go ahead and be traveling. So I'm going to document the process of, staying productive while I'm doing that. And yeah, it'd be cool for you to follow along and support the journey. With that, let's go ahead and jump to the charts right now. Okay, so here's the article that came out. Okay, so I'm recording here. I have the screen share. We'll figure out how to put this together. Either way, we have this article. What it says in short is this: that the original day to roll out everything that they were supposed to roll out with the vaccines has been pushed back because of supply issues, meaning there's not enough vaccines for the demand that's out there. So when this came out, literally when this came out, we had this happen right here. Price was here at this point. This is the S&P 500. Right next to it, I have basically Dow Jones. We can see this huge spike to the downside. This is a huge spike, you guys. If you guys are day trading, this is a pretty heavy move. Realistically, to catch this move, and it looks like, oh yeah, this is a high point. We could have sold, this would be a double top. We saw that price was rejected here before. It would make sense to sell here. No, it wouldn't be that easy, okay? At this point, as these are actually forming, these candlesticks are forming, it looked like we were actually going to break up higher. And then this news event came out and literally the spike happened instantly, especially right here on the Dow Jones. We basically closed above this resistance area, and this ended up being a fake out on the hour time frame. We can actually go ahead and remove this drawings here. We can see now, hindsight, that hey, look, this was just a wick, this was a fake out. And there's different theories to what this relates to, what this correlates to, but overall, I'm just gonna say this. It looked like we were going up. We can actually even see on a lower time frame right here, a 30-minute time frame, price closed above this very, very strong. We pushed up and then literally just spiked down. So to catch that move would be very, very difficult. Now, what I want to talk to you about is a concept called market structure. Now, market structure is very, very simple. Even if you don't trade, you've never traded before, it's this concept that as the market's moving higher, it's going to print higher highs and higher lows. Here are my higher highs. Here are my higher lows. And as long as this maintains, you would keep buying. Now, what we're seeing happen here, we can actually see this market structure playing out. We have basically a high, we have a higher low, we have a higher high, we have a higher low, higher high, higher low. Now, notice that we're starting to not have as much momentum to the upside. We're approaching this price point up here that we were rejected at very strongly before, which was basically, we can see this right here, right? We had a huge spike down at this price point. So, you know, it did make sense that there would be some selling pressure potentially here in this area. But if we actually look at this drop in comparison to this drop, it doesn't look like much. But when you're day trading, you know, and we actually go ahead and zoom in here, we can see that this was a very large candlestick that printed when that news event came out. So altogether, as we can see, we do have uptrend market structure maintaining. And if we actually go to the daily chart, we can actually see the same exact thing. We have a higher high, we have a higher low, and now we're basically printing another higher high. So we are due for some type of retracement, but overall, as long as this keeps printing higher highs and higher lows, we can expect further upside movement, unless there was something that came out of the news that was just a curveball. So for example, let's just say that they said, hey, the vaccine doesn't even work actually, because, you know, X, Y, and Z trials happened, and basically, you know, whatever, it makes people grow a third arm. I don't know. I don't know. But, you know, what I'm saying is we're overall in an uptrend. So if we were going to go ahead and see something, and let me actually just turn this on, because this is actually the application I made. It basically shoots out buy and sell notifications. So we can see the buy notification come off at this point, and we're still in that buy notification. We have not had a sell notification here on the daily time frame, right? We have not had that happen. So I'm not saying that this is the reason why, you know, it's difficult to sell, but, you know, even here on the 4 hour, we could see the buy notification. We went up. This is the software that I developed. It's actually pretty cool. But let's just go ahead and talk about what would happen to actually have a shift, you know, a shift in structure, a shift in our bias. So what would happen for that to be valid? So we would need a shift in structure, which would look something like this. The market would be printing higher highs and higher lows. We would see a strong move down, taking out these higher lows. The more it takes out, the better. But let's just say it took out this higher low, and then we would need that followed by a lower high. Once that happens, we have a shift in structure, and we can start looking for downside movement. So overall, these points right here, these higher lows, these are the areas that you'd obviously want to be buying into. And there's a whole process to actually figure out what's an ideal price point to buy into. If you're just investing long term, hey, don't be scared. We're still maintaining uptrend market structure here. And as you can see here, when we had the real drop, you know, at the beginning of the pandemic, we basically had that shift in structure I talked about. We printed a lower low. We took out this higher low, as well as this one right here, and even this one right here. So we took out 3 higher lows and actually formed that lower high, and that followed with a strong drop to the downside. So since that point, overall, the momentum has been to the upside, and recently we have been printing new highs in the S&P 500, as well as NASDAQ, as well as the Dow Jones. And you can see that right here on the chart. Now, these do correlate. Obviously, they're not going to look exactly the same. As we look at the Dow Jones right here, we can see this area, and we're actually been sitting here just really accumulating, consolidating for a bit of time right now. So what would be that shift in structure? Well, we definitely want to take out this price point right here, print a lower low, followed by a lower high, and then we could potentially look for more downside movement this way. Now, until that happens, it's going to be a lot safer for you to keep buying. And if you're just investing long term, you know, this detail that I'm showing you here on these lower time frames, don't pay much attention to it. Just look at the daily or even weekly. And when we actually go ahead and look at the weekly, we can see the uptrend market structure as well. Higher highs and higher lows. So even if we do get a decent drop and we maintain this, you can start to see good price points to buy into this index, or you know, the S&P 500 or whatever it is you're looking at. So that's the basics of market structure. It's basically composed of higher highs and higher lows. What we call these pushes and these moves away from the trend is impulses. This is my impulse, and the movement away from the trend is the retracement right here. So here's a retracement, here's a retracement, here's a retracement. So we can go ahead and apply that to the chart. And I'll just go ahead and do this on a weekly time frame, so it's just super simple. Here's an impulse, here's a retracement. Here's an impulse, here's a retracement. Here's an impulse, retracement, impulse, right? So you can kind of see how the market structure is maintaining the upside. News events do affect the market. We could see that on the lower time frames. Absolutely. We can see that one news event came out and we had this one candlestick form, and it literally, the amount of volume in this, if we look at, you know, these last few hours here, it just completely just demolished, devoured, engulfed, you know, everything that was before that. And now if I actually look at this right here, what do we have happen? We had a lower low print, we had a lower low print right here, and now this could be the formation of a lower high, right? And then we can expect some further downside movement. That's just looking right here at this time frame, which is the 15-minute time frame. On the hour time frame, we're technically still maintaining uptrend structure. We have a higher high, here's the higher low, and you know, yeah, we could push down a bit more, but as long as this holds up here in this area, we can go ahead and expect further movement to the upside. So that concludes this video. I hope you got some value. Like I said, I wanted to keep this super simple. Trading can be overwhelming, investing can be overwhelming. If you're starting to trade, I would recommend looking at higher time frames, learning to trade with those higher time frames, and that's going to make you a better short-term trader when you decide to do that. And if you're on the other end of the spectrum where you're just buying into indexes over time, this information is not as relevant, but it's still something you can think with, so you understand that it's natural for the market to, you know, ebb and flow, you know, to the upside. Then it'll have a period of correction and then go farther to the upside. Again, that's normal. It's just a part of the way the market moves. It's not going to just shoot straight up like a rocket ship. On another note, my thoughts on the vaccine and everything that's happening, as long as that gets released, I hope and pray that things start to open up. An article about small businesses, and it's absolutely horrible what's happening to local businesses. If you guys are in an area where you're seeing local businesses, give them your money. You know, buy stuff from local businesses if you can, if you have that chance to. And let's hope that things turn around, because this year's been a weird one so far, definitely. Hopefully next year's not exactly like it. We start to open up and things start to, you know, flourish and people get healthy, and this whole COVID thing is not a deal anymore. Things return to normal as they can be. I personally think that masks and these kind of things are gonna stick around, but we'll see. Anyways, that concludes this video. If you like this content, you got some value from it, make sure you give me a like and subscribe if you want to see more content. Anyways, this is Nick Legend. Be great. I'll see you in the next video.